So let's talk about Sundar Goyal's CITI note, which has come out, and they're talking about high valuations coming in. So what this note is highlighting is that the valuations currently are at a all-time high, and they are going to be visiting the key drivers as well. Now talking about the Nifty 50, they said that Nifty 50 has given 50% return over the past year. So very good return coming in over there as well. Now Nifty 50 now is currently trading at now trades at 1.5 times above the 5-year mean on the valuation as well, is what the CITI's note is highlighting. Now moving forward, the EPS revisions actually coming in have been positive, especially coming in the first half of FY21, while most of these revisions have been discretionary cost-led revisions. So surely that is very interesting, and that is something that they have specifically highlighted about the EPS revisions. Now CITI is surely maintaining their FY22 expected Nifty 50 target of 15.5k, that's 15,500, and a small exposure to Adani Ports is also. They've added a small exposure coming in for Adani Ports as well. Now obviously they've added Adani Ports in a small weight. Most of that around 20% pullback from its highs, most of it post the 20% pullback coming in from the highs. We've seen the Adani stocks actually buzzing a lot, and there is slight bit of a pullback which we saw coming in between. So that is when they added it, when the pullback was there, around the 20% pullback. Now Adani Port obviously continues to do well in terms of business of the company as well, so that is why they are buying the stock as well, and they have added small exposure to Adani Ports. Now talking about the key weights and key overweights, what are the sectors that the company is actually looking at, what is CITI actually favoring? So we'll talk about it is overweight. What is the company overweight on? What is CITI actually overweight on? They are overweight on financials as well as industrials, and this may sound counterintuitive, but they're still quite overweight on these two. That's two sectors, financials as well as industrials. They see better risk reward in select banks coming in, and most other brokerages also surely have highlighted this fact, but CITI is surely highlighting that the risk reward for few banks, few select banks, is going to be good, and that is why they believe, and that's why they are quite overweight on the financial sector as well. Now for them, industrials, when you talk about industrials, select industrials look good as as the capex is could be a good potential, and could see a pickup coming in the current year 22 as well, is what we're expecting. Yes, we were impacted by it, you could see some impact coming in due to the COVID, but in the current period, current year 22, they are expecting that industrials could see a good pickup coming in on the capex front, and there is a potential to see this pickup, and that is why they are overweight on industrials as well, and that is what is mainly highlighted in the note by CITI.